Hey everyone, it's Charlie. It is July 16th, Thursday. Today I was thinking, if you looked at this period of time last summer and compared it to what's going on now, you'll see a lot of similarities. Last summer, we had Barney Frank coming out saying that, maybe late last spring, he was come out saying that Freddie and Fannie were, for the most part, sound. We had cheerleader analysts telling us that the worst of the subprime was over and the mortgage meltdown was contained. And then, boom, he stepped on the first financial landmine and the bailout frenzy began. Well, if you look at what's going on now, it's really remarkably similar to what happened then. We have the same cheerleaders conducting a pep rally on the fact that the worst of the recession is behind us, and that that pesky lagging indicator of jobs will soon catch up, and we'll have growth in the second half of 2009. So that leads me to believe that we're about to step on the next economic landmine, and I think in this case it's going to be small businesses. And we've had 54 banks fail this year. But this next one isn't a small regional bank with hundreds of millions in assets. It's a world provider of small business loans with billions of dollars in assets. It's CIT, and it received $2.3 billion in the first round of bailouts, of which we'll more than likely lose. But this company finances 1 million businesses worldwide, 300,000 retailers in the U.S. It's the third largest financier of aircraft companies in the world, and between 2000 and 2008 was the number one lender to the Small Business Administration flagship loan program. So, it finances a lot of the small business in the country. Well, it got told today that basically it was too small to save, and it wasn't going to get a bailout. So the next option for it is bankruptcy. Now, Treasury came out and said that the other banks will pick up the slack. So when I read that, I was like, you've got to be kidding me. What bank in their right mind is going to lend money in this environment? CIT is stuck with the loans that they have. Because they've already made them, so they're doing everything they can to make sure they're getting serviced on these loans. But is J.P. Morgan going to go into business with Dillard's and Dunkin' Donuts in the worst economic meltdown since the Great Depression? I don't think so. So what'll happen? Thousands and thousands of businesses will just have to shut their doors. I mean, without operating lines, they can't make payroll, they can't pay for inventory, they can't pay for shipping. And a lot of shipping companies are going to go out of business. So even if a retailer is still managing to stay afloat, the shipping costs are going to go up because companies are going to go out of business. So, I think we've seen a government corporate merger in big business, big finance, big insurance, auto industry. We're going to see it with the medical industry and the energy industry with cap and trade. So the last segment to go after is going to be small business. Now, the thing that's going to happen when this round goes, when this downturn begins, is I think millions and millions of people are going to wake up because the majority of the country works for small businesses. And 70% of the job creation is through small businesses. So when this assault begins, I think the only bright spot is we're going to see a mass awakening to what's going on. So that's all I got about that.